Good morning. Today is Thursday, August the 17th. The time right now in Singapore is 10:13 in the morning. Overnight, the much anticipated FOMC minutes, in which referring to the Federal Open Market Committee meeting, in which the Fed actually decides on interest rate decision. The minutes actually reveal that members of the committee itself are a little bit mixed in terms of their opinion. Some says that rates has already high enough. Some are saying that maybe the inflation remains a concern, and there is still room for rate hikes. So at least the consensus is that market participant feels that in the September FOMC meeting, which is going to be next month, there is very low risk that they will hike interest rates. So that is at least something to go by, but market reacted negatively. We can see equity markets in the States has closed on a weak note. But today we want to talk about the Aussie dollars. This morning we saw the release of Australia labor numbers. They lost something like 14,600 jobs when the market expecting them to add 15,000 jobs. So that was a major miss. And unemployment rates is back to 3.7, where we saw this number back in February of this year. So again, we can see the Australia economy is slipping as well. And of course, this does not help, because yesterday we saw China industrial production number, and the retail sales number was actually quite horrible. And also on top of that, we have a surprise rate cut by the People's Bank of China, which is the de facto central banks. So overall, when China is not doing well, obviously Australia will not do well, because Australia unit, this Australian dollars is actually traded as a proxy relative to the Chinese yuan. So if the Chinese economy is struggling, you can bet that the Aussie dollars will not do well, in which this is what we are seeing. This morning, market reacted to the labor number to the downside. We've seen a price at 0.6365, and this is the lowest the Aussie has actually traded since February or since November of last year. So we can see that the Aussie unit right now looks very vulnerable, and there is nothing with from where we are right now all the way to the October low of 2022, which is at 0.6170. So we have a bit of a drop here, maybe 200 more pips before we find real support, because there's no chart point between where we are right now and until the last October low of 0.6170. Prices is likely to go into either the 60 cents or 62 cents level over time. So do watch out for further losses in the Aussie unit. And this is all I have for you for today. Tomorrow I come back to you with another update. Bye-bye. Take care.